Breaking barriers, Trump paves the way for crypto and private equity in your 401k. On August 7th, 2025, President Donald K. Trump made a bold move that could reshape the landscape of retirement savings for millions of Americans. With the stroke of a pen, he signed an executive order that could potentially open the floodgates for alternative assets like private equity and cryptocurrencies to enter the 401k arena. And this is the part most people miss. The implications of this decision could ripple through the financial sector for years to come. The father of the 401k revolution, President Trump's executive order doesn't instantly alter the investment landscape for retirement savers, but it sets the stage for significant changes. Federal agencies must first rewrite regulations to accommodate this expanded range of investment choices, a process that experts predict could span months, possibly even years. But once implemented, employers could offer a diverse selection of mutual funds and investment opportunities to their workforce, including alternative assets such as private equity, cryptocurrencies, and real estate. A shift in retirement saving dynamics. The 401k has emerged as the cornerstone of retirement savings for American workers, with the majority of employers providing a menu of investment options across various asset classes, primarily stock-based mutual funds. The $5 trillion private equity industry, traditionally focused on investing in private businesses instead of public stocks, has long sought to carve out a piece of the retirement pie. Simultaneously, the cryptocurrency sector, bolstered by its executives' fervent support for Trump's 2024 campaign, has been striving for mainstream adoption among the American populace. It was only a matter of time before Bitcoin found its place in American 401ks, commented Corey Clipston, CEO of Swan Bitcoin. As fiduciaries recognize Bitcoin's superior risk-adjusted returns over the long haul, we're likely to witness increasing allocations, especially among younger, tech-savvy workers seeking hard assets over fleeting paper wealth. This executive order could grant private equity and crypto firms the long-desired access to a vast pool of trillions of dollars. Industry applause and regulatory overhaul. Investment firms greeted Trump's executive order with enthusiasm, with TIAA, a manager of retirement assets for educators and academics, and BlackRock, a leading investment giant, expressing support for the measure. They highlighted the potential benefits of private investments when incorporated into professionally managed vehicles like target date funds or guaranteed annuity products. However, changing the 401k rules requires a redefinition of qualified assets under retirement guidelines, overseen by the Labor Department and other regulatory bodies. The evolution of retirement plans. American retirement plans are governed by the Employee Retirement Income Security Act of 1974, ERISA, which mandates employers to provide retirement options in their employees' best interests, not Wall Street's. Presently, most retirement portfolios consist of stocks, bonds, cash, and commodities like gold. Even after new regulations are established, major retirement plan providers like Fidelity, Vanguard, and T. Rowe Price will need time to develop suitable funds for employers. Consequently, it might take several years for crypto and private equity investments to become commonplace in individual retirement plans. Market reactions and regulatory shifts. Following the announcement, the price of Bitcoin surged 2% to $116,542, nearly doubling since Trump's election. Under Democratic President Joe Biden, federal regulators approached cryptocurrency investments with caution due to their notorious volatility. Unlike traditional markets, where a 2 or 3% daily swing is noteworthy, cryptocurrencies such as Bitcoin and Ethereum often experience double-digit percentage fluctuations in a single day. For crypto companies, which generously contributed to Trump's campaign and inauguration, gaining ERISA qualification was a top priority. Notably, Coinbase, a prominent U.S. crypto company and major donor to Trump's military parade, benefited from the SEC dropping its lawsuit during Trump's tenure, a case the Biden administration deemed cryptocurrencies as securities. The rise of alternative investments. Cryptocurrencies hold particular appeal among young Americans, despite their volatility. Since its inception by an anonymous programmer almost 2 decades ago, Bitcoin has trended upwards overall. Private equity firms reliant on high net worth individuals and long-term pension plans stand to gain from tapping into America's retirement savings, creating a substantial cash reserve. Blackstone CEO Steve Schwarzman has repeatedly expressed his dream since at least 2017 of accessing these retirement assets. Historically, both Republican and Democratic administrations have agreed that riskier, costlier, and less liquid private equity investments should remain outside the realm of 401k plans. But now, the future of retirement savings is poised for a dramatic transformation, with the potential to revolutionize how Americans prepare for their golden years.